Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Bill Sokol. He is Senior Product Manager at VanEck. Great to see you here at Exchange ETF.
It's always great to be here.
Wonderful. Okay, so tell me, what investor outcome or problem are we talking about today?
Today we're talking about finding attractive income without taking excessive risk, and I think that's something that income investors are always grappling with. But after what we saw last year, with a very big increase in rates, we think that opportunities have emerged. In particular, we like collateralized loan obligations, or CLOs. For those who are not familiar, because this is a new asset class for a lot of investors, CLOs are securitized pools of leveraged loans. So they issue multiple tranches of debt from AAA down to single B or even an equity tranche. So you have a full capital structure with varying risk and return levels. The reason we like CLOs right now, it's really one of our best ideas for income this year, is that yields are really high. So, we would say go where the yield is, and right now that means the short end of the curve. The Fed has raised rates aggressively over the last year. CLOs are floating rate, so it means coupons and yields have gone up, and yields are actually higher than longer duration fixed income asset classes. At the same time, spreads on CLOs are high relative to historical averages. You're getting a spread pickup versus similarly rated bonds and loans, and that pickup is higher than usual, which to us means that the CLO market is pricing in potential uncertainty ahead, perhaps an economic slowdown or weaker earnings. And that's the second reason we like CLOs, for that exact environment, if that's in fact what we're seeing, because investment grade CLOs, investors are really well insulated from deterioration in the portfolio because of various structural risk protections that are built in. So we think CLOs offer a very compelling combination right now of attractive yield, but also high quality exposure.
Okay, so let's talk about ETFs. Do you have any ETFs that you'd like investors to consider?
Yeah, so last year we launched the VanEck CLO ETF. The ticker is CLOI. It's an actively managed ETF. We launched it in partnership with PineBridge Investments. They bring decades of expertise in the CLO market and broad leverage finance capabilities. The CLO asset class has been one of the best performing fixed income asset class over the last decade. And the reason for that is that you do have this opportunity for enhanced returns, enhanced yield, if you go beyond AAA only, because you have this entire capital structure. But we think that really means you need to be active. So that's where PineBridge comes in with security selection, allocating the portfolio where they see value, and adding or reducing risk depending on market conditions.
Okay, and where should investors go to learn more about this ETF?
Investors can go to our website, vaneck.com. We have a lot of information on CLOI, a lot of information on CLOs as well, because again, this is a new asset class and we know a lot of investors are very curious about it.
Great. Well, thanks for joining me, Bill. And that's ETF Leaders, powered by the New York Stock Exchange.